I believe you have already heard many times, if you don't see the liquidity, you're the liquidity. In this video, I will cover how I approach reading price action and spotting good liquidity bulls. I will mention some characteristics that I'm looking for in order to know which zone is a high probability zone and which one is not. I will share with you something that I wish I realized earlier that improved my win rate drastically. The ability to read and understand price action is a must if you want to become profitable. I will try to keep everything as simple as possible and cover everything that you need to know about liquidity. For better understanding, I will be doing everything on the charts and showing examples. So let's dive in.
Liquidity is the driver of price. So if we don't have liquidity, price won't be moving. Many people say we only have liquidity at swing highs and swing lows. But that's not correct, because if we only had liquidity at swing highs and swing lows, price wouldn't be creating the candlesticks. It will be jumping from the high to the low and again to the high. So that's why I don't call them just liquidity, I call them liquidity pools. And what are the types of liquidity pools that we have? We have trend line liquidity, we have triple tops and triple bottoms. So this is a triple bottom, this is a triple top. We have monthly highs and lows, weekly highs and lows, daily highs and lows, and session highs and lows, which is telling to us that we have liquidity everywhere. So how do we identify which liquidity pool will be the next target? Well, something that you should keep in mind is that price moves from a buy-side liquidity pool to a sell-side liquidity pool, and vice versa, from a sell-side liquidity pool to a buy-side liquidity pool. So if we have recently taken a buy-side liquidity pool, price will be going for a sell-side liquidity pool. And the same, if we have taken sell-side liquidity pool, price will be going and targeting a buy-side liquidity pool. So that's how we identify the next draw of liquidity or the next target. When we are in a bullish market, when price is creating higher highs and higher lows and respecting bullish order flow, price looks for internal sell-side liquidity and targets external buy-side liquidity. And when we are in a bearish market and creating lower highs and lower lows, price is seeking for internal buy-side liquidity and targets external sell-side liquidity. Usually, this internal liquidity is created above a fair value gap or an order block. So once we have this liquidity graph into this PV array or discounted point of interest, which can be in the form of a fair value gap or an order block, then we take a trade from here according to our entry model and we target the external buy-side liquidity, which is the next higher high. So we are pretty much targeting for and assuming that price will create a new higher high. And the same applies to bearish market, but instead of a higher high, we're targeting and assuming that price will create a new lower low and continue with the order flow. So the first thing that you should ask yourself is, are we bullish or bearish? So is the market structure bullish or bearish? And you shouldn't be just looking at one time frame. I believe that everyone should be looking at higher time frame and go into the lower time frames in order to understand what is happening on the bigger picture. Some people only stick to one time frames. That's not something that works for me and I can rely on. That's why I always do top-down analysis and identify if we're bullish or bearish. Once I know if we're bullish or bearish, I ask myself, where is the price coming from? Did we take recently an external buy-side liquidity pool or did we take a sell-side liquidity pool? And once I know the answer of this question, I know what will be the next target. So if we have taken buy-side liquidity, we will be targeting sell-side, and if we have taken sell-side, we will be targeting buy-side. So what are the high probability trades? The high probability trades, as I mentioned, is when we wait for price to take sell-side liquidity pool in a bullish market, internal sell side, and target external buy side, and in a bearish market, when I'm waiting for price to take buy-side liquidity, internal buy-side liquidity pool, and then target the external sell-side liquidity pool. We can also take counter trend trades to target the internal liquidity, but those are lower probability trades that might result in a lower win rate. So we should keep that in mind. And another thing that I would like to mention is high resistance liquidity pools and low resistance liquidity pools. And the name itself is explaining to us what they are, but some people might get confused. So what is a high resistance liquidity pool? What does high resistance mean? Well, high resistance is when price is resisting, should be resisting to pass this liquidity pool. And those pools or those zones are the ones that have previously manipulated or liquidated previous liquidity pools. Let's say we have multiple equal highs, and then price breaks down, makes people think that we are breaking structure on the downside, traps people by liquidating these relative equal highs, and then breaks structure and continues lower. So when we see that price has manipulated already and it has taken a liquidity pool, this makes the zone a high resistance liquidity zone. Why? Because we know that liquidity is acting like a magnet for price. So once we have taken the liquidity above those relative equal highs, there is no much liquidity left here. So the magnet is not strong anymore because there is no much liquidity. Low liquidity, low attraction from the magnet. High liquidity, high attraction from the magnet. That's why low resistance liquidity is the one that moves quickly and smoothly. And I will also show an example of low resistance liquidity pool. So those high resistance liquidity pools are actually the ones that are forming high probability order blocks. So those are order blocks that have manipulated, or zones that have manipulated previous liquidity pools. And these are the zones that we would like to look to trade from. And what are the ones that we would like to target? The ones that we would like to target are the low resistance liquidity pools. And those are zones that haven't manipulated or liquidated previous pools and have one or more swing highs or lows above or below them, depends if we're in a bullish market or bearish market. And those are the ones that are forming the trend lines, or these equal highs and equal lows that I just mentioned. So how does it look like? So here is an example of this low resistance liquidity pool. As I mentioned, we want to trade from a high resistance liquidity pool and target low resistance liquidity pool. And this low resistance liquidity pool in a market scenario would look like that. So we have multiple lows that have been created but haven't been liquidated. And such kind of liquidity pools are usually targeted quickly and smoothly. So that's why we want to use them as target. And they are usually created within the structure of this external, and here is the external, in this case sell side liquidity, because we are shifting bearish. But the same applies for bullish market. So this is the explanation here. Now I'm gonna jump on the charts and show you examples. Okay, so I will be showing an example on a daily chart and a 4-hour chart, but price is fractal, so the same thing is happening even on the lower time frames. So as we can see here, we had a market structure break and we took external sell side liquidity. Once we took external sell side liquidity, what happened? We had a shift of market structure and price started to target buy side liquidity. And how does this buy side liquidity pool look like? We see that it's in a form of a trend line. So for example, here price is not like, the structure is not perfect. So even though this zone here had relative equal highs above it, we respected it, and we can see that we had a order block here, and we had a fair value gap as the example that I showed previously. So sometimes, yes, we are going to have equal highs even at the place where these order blocks and fair value gaps have been created, but this will kind of like help us to differentiate between higher probability and lower probability zones. So in this case here, I would not go aggressively and place an entry here. I would be looking for a confirmation in order to take a position. Now, it also depends on the trading style that you have. If you're a swing trader, day trader, scalper, etc., etc. If we're on a daily chart, I would never just place a trade randomly without a confirmation on a lower time frame. But we should be extra careful when we have cases like this. And we know that cases like this will happen quite often because the market is not perfect. It's not moving as per the theory, just higher highs and higher lows. So here we took sell side liquidity, we targeted buy side liquidity, we tapped into this order block, or it can be also a fair value gap. We had a small fair value gap here, and we shifted again. And the same cycle repeats over and over again. What happened here? We had another sell side liquidity pool being taken. Let me actually mark that so that you can see it more clearly. So this is an external sell side on a lower time frame. What happened from here? Price started targeting buy side. This is a daily highs. Here we have more daily highs that price has targeted. Oops, I'm sorry. Let me even go to a 4-hour chart. It will be even cleaner. So here we can see a clean trend line again being formed, price tapping into this fair value gap, and maybe even, no, we didn't reach the order block, but we tapped into the a premium PDRA in a form of a fair value gap or an order block, and again continued on the downside. So for example, in this case, what is forming a high resistance liquidity pool? What did I mention? When a candle or a zone manipulates previous liquidity pool and then breaks on the downside, this is creating a high resistance liquidity pool. And what do we want to do from this high resistance liquidity pool? We want to look for trades to trade from these high resistance liquidity pools. And what do we want to target? We want to target low resistance liquidity pools. And where is this low resistance liquidity pool in this case? Well, once we took this buy side liquidity, we're in a bearish market. We have already checked and asked ourselves the questions that I previously mentioned. We're in a bearish market. This is the external sell side liquidity that we want to target. But what did price create on the way on the upside? It created low resistance liquidity pool. We see that none of these zones have been previously targeted. So we have 1, 2, 3, 4 lows that are low, creating this form of trend line that is a low resistance liquidity pool. And those ones are mainly targeted with news. Why? Because with news, we have this smooth, fast movement that targets those low resistance liquidity pools. And I can give you thousands of examples, but you will have to train your eyes in order to be able to spot that by yourself. For me, since I've spent so much time analyzing price and looking at how it's behaving, it's very easy for me to understand which one is an internal liquidity and which one is an actual market structure shift. So something that I mentioned at the beginning of this video is that when I came to a realization and understood that price is not actually breaking structure here, but just targeting internal liquidity, this increased my win rate drastically. So people get trapped by thinking that by having this push on the upside, for example, here, that price is shifting structure and we are becoming bullish. But the reason why they think that is because they lack the higher time frame picture and they don't understand what is happening on the higher time frame. If they pay closer attention to the higher time frame and they know where price is coming from before, and that we had a market structure shift here and we have an order block that has previously liquidated low, a trend line, low resistance liquidity. So we have another high resistance liquidity pull here, or a high probability order block. So once we know that we have tapped in such an area, people are not gonna get trapped by these fake market structure breaks or market structure shifts or change of characters, however you want to call it. But once you understand this cycle, believe me, your win rate will drastically change, will be improved. And yeah, I can continue showing you like lots of such examples. So once we took this external sell side liquidity pool, which was an external one even on a higher time frame, what happened? Price started targeting buy side and creating another sell side for the future. And when you start putting together the puzzle, you will see that everything is connected. So price is creating those low resistance liquidity pools usually until we reach either equilibrium or premium in a bearish market, and discount or equilibrium or discount in a bullish market. So this way you will know how to create ideas and you will know how to spot which one is a higher probability trade and which one is a lower probability trade. And once again, I will repeat, the ones that we want to take are the ones that will play smoothest and fastest, which will be the ones that are following the higher time frame structure and the order flow. So in a bearish market, in this scenario, the perfect trades would be the trades where we're going to be just waiting for price to target this buy side liquidity, and for us looking for trades to target the external sell side liquidity.
I hope this video made lots of things clear. I recommend you to go and replay the video, take notes, look at the examples that I gave, and try to spot similar scenarios in the market by yourself. That way you will realize how powerful and important it is to be good at reading price and understanding liquidity. If you found the video helpful, make sure to leave a like, comment down below, and let me know what you would like me to cover in future videos, and of course if you want me to explain some parts in more detail and with more examples. And don't forget to subscribe if you haven't already. If you want to know more about daily bias, make sure to check this video here, because I know that it's another common question. Thank you so much for watching, and I hope to see you in the next video.